For decades, the U.S. dollar has served as a dominant currency in Africa's financial systems, trade deals, and reserve holdings. From major commodity pricing to cross-border transactions, the greenback was considered the default. But in recent years, a noticeable shift has begun. Africa is slowly but surely moving away from dollar dependency. This transition is subtle but significant, driven by a mix of geopolitical, economic, and technological factors. Here are 5 key ways the dollar is losing its power in Africa.
The rise of alternative currencies in trade.
Several African nations are actively reducing their reliance on the dollar by trading in alternative currencies, especially the Chinese yuan, euro, and regional currencies. China, Africa's largest trading partner, is leading the charge. Many African countries, including Nigeria, Kenya, and South Africa, are now settling trade deals in yuan. China's Belt and Road Initiative has also encouraged African governments to borrow and transact in yuan, strengthening its presence on the continent. Russia is pushing for similar arrangements, urging partners to use rubles in transactions, particularly in energy exports. This shift is more than symbolic. It reflects Africa's pivot toward new alliances. The diversification of trade currencies reduces exchange rate volatility and transaction costs, giving African countries greater control over their economic decisions.
De-dollarization policies by African central banks.
Some African central banks are deliberately reducing their dollar reserves and shifting toward a more balanced foreign reserve composition. Countries like Ghana, Ethiopia, and Zimbabwe have voiced concerns about over-reliance on the dollar, particularly after witnessing how U.S. sanctions can cripple economies by cutting off dollar access. In response, they're building reserves in gold, the euro, the Chinese yuan, and even their own currencies. Nigeria's central bank, for example, has promoted the use of the naira in local and regional trade, issuing guidelines to limit the use of dollars for domestic transactions. These efforts are intended to insulate economies from external shocks and increase monetary sovereignty.
The growth of continental payment systems like PAPSS.
One of the biggest game changers is the Pan-African Payment and Settlement System, PAPSS, launched by the African Export-Import Bank, Afreximbank. This platform enables instant cross-border payments in local currencies across the African continent without the need to convert into dollars. Before PAPSS, even 2 neighboring African countries had to use a dollar as an intermediary for trade settlements. Now, businesses in Ghana can pay suppliers in Kenya directly in local currencies, cutting costs and removing the dollar from the equation. As PAPSS adoption grows, it's reshaping the continent's financial landscape, promoting intra-African trade and decreasing dependency on foreign currencies.
Emergence of regional economic blocs.
Africa is increasingly embracing regionalism as a means to reduce external dependency. The African Continental Free Trade Area, ASCFTA, is at the heart of this movement, encouraging nations to trade more among themselves and use local or regional currencies for transactions. The East African Community, and the Economic Community of West African States, ECOWAS, are working on regional currencies, the East African Shilling and the long-delayed ECO, respectively. While these efforts are still in progress, they reflect a broader ambition to challenge the dollar's dominance by strengthening regional currency unions. The logic is simple. The more Africa can internalize its trade and finance systems, the less it needs the dollar to grease the wheels.
Technological disruption and the rise of digital currencies.
Africa is a global leader in mobile money adoption and financial technology innovation. From M-Pesa in Kenya to mobile banking platforms across Nigeria, Ghana, and Uganda, millions of Africans are transacting without traditional banking infrastructure. Now, several African countries are exploring or launching central bank digital currencies, CBDCs, like Nigeria's Naira and Ghana's eCedi. These digital currencies allow for more efficient domestic and cross-border payments without relying on the dollar or even commercial banks. As digital currency ecosystems expand, they have the potential to bypass dollar-based systems entirely. Blockchain-based platforms are also offering new forms of trade settlement that are faster, cheaper, and dollar-free. While the US dollar is far from being obsolete in Africa, its influence is waning. Strategic partnerships with non-Western powers, the rise of regional trade and currency systems, de-dollarization policies, and rapid fintech innovation are all undermining the greenback's once unquestioned reign. Africa's move away from the dollar isn't just about economics, it's about sovereignty, resilience, and charting a new course in a rapidly shifting global order. If this trend continues, the next decade could mark a fundamental transformation in the continent's financial identity, and the dollar may no longer be king.